China's exports unexpectedly contracted in October 2025, marking the first decline in nearly 2 years. Joining us to discuss is Daniel Lacalle, Chief Economist at Tressis, international financial analyst, and the author of the book Freedom or Equality. So, Daniel, good afternoon to you. So, what do you think the reason is that led to this contraction in exports?
Thank you very much. A number of reasons. Number one, the Chinese exporters have been unable to find alternative homes for their exports outside of the United States. And some of them have been unable to absorb the elevated levels of tariffs. Not only that, but many of these exporters have found themselves with very significant working capital challenges. So we have seen throughout the course of these months how the so repeated narrative that China would be able to basically offset all of its exports to the United States with alternative routes didn't happen. We also saw a significant crackdown on origin washing from the United States with the agreements with Vietnam and other countries. And all of this has put a very, very significant level of pressure on particularly those exporters that had narrower margins and were unable to absorb the tariffs.
So, Daniel, has U.S. demand for Chinese products decreased because of tariffs? We're seeing exports to the U.S. down 25%.
Well, it's not that demand has declined, is that there is demand for a very significant proportion of these products at the right price. Another of the things that I repeatedly debunked throughout all of the negative comments about the Liberation Day was this idea that United States customers had almost unlimited demand or inelastic demand no matter what the price. It is true that US customers have quite an appetite for cheap products as long as they're cheap. So, when many of these exporters have been unable to absorb the tariffs and at the same time they have had to deal with rising freight charges and also rising financing charges, all those things have certainly created a competitive disadvantage for many of them, and they have been unable to sell elsewhere, and definitely to find different countries that would purchase those products. The European Union, for example, has reduced quite significantly also its demand for some of the cheaper products, of the below $250 packages.
So, Daniel, this contraction in exports, does China have enough capacity in terms of domestic consumption to offset that contraction of exports?
No, unfortunately, it doesn't. China is a very, very big economy, but it's a very poor economy when you look at what the average consumer has. About 60% of the population in China make less than $300 a month. And obviously, the ability of most Chinese citizens to save and to consume is massively lower than that of an American consumer in terms of access to credit cards, and obviously the ability to save some money. No, so one of the problems that China is dealing with is the double whammy of overcapacity at an industrial level, in which most of the industries are dealing with much higher levels of capacity and production than what the internal demand and certainly external demand would suggest, added to an internal market that simply cannot be the solution to the challenges of exports abroad. We often hear from Chinese officials that if Chinese consumers increase their consumption by $1,000 a year, that would immediately solve all of the problems of the Chinese economy. Well, $1,000 a year is a fortune for the vast majority of Chinese citizens, which are way, way, way behind the figures that we see in cities like Shanghai or like Beijing.
So it seems like, based on what you're saying of Chinese officials, it seems like China does have a desire, right, to
Yeah.
sort of rebalance its economy towards consumption-led growth. So what are the challenges? You mentioned some of them, but is it
Hmm.
entirely possible, if given enough time, to rebalance its economy?
Well, if you remember, for example, the Japanese crisis at the end of the 80s, beginning of the 90s, the government was looking to offset the challenges of the external market by generating a level of stimulus for the internal demand. However, that obviously that could happen because at the time Japan had one of the most developed and richest consumers in the world. This is not the case in China. The problem is the following: you cannot bake the cake and eat it. You cannot, on the one hand, have an incredibly competitive, low cost exporting and producing nation in which salaries are very, very low and in which employment is elevated, like the Chinese economy is, and at the same time expect that those citizens are going to offset the global demand of products by consuming more. It's virtually impossible. You cannot have a population that has very low wages, no relevant elements of social security, etc., very, very limited levels of protection, and at the same time expect them to consume significantly. That cannot happen. You would have to wait for the Chinese economy to become a high salary and high productivity economy, and that is way, way, way ahead, if any, in the future, because obviously the Chinese economy, unfortunately, in the last 10 years, has been closing instead of opening. No, so you cannot basically be, on the one hand, a cheap labor country while having large domestic consumers.
So, Daniel, how do you assess the long-term outlook then for China's
Hmm.
economy based on what you're seeing as the current trajectory headed?
Well, they obviously need a trade deal urgently. That's very, very clear. We see it in the working capital figures of the Chinese companies. We see it in the industrial figures. We see it in the port figures. All of this. That shows that there is an absolute urgency of a trade deal. Number two, that trade deal must come with the opening of the Chinese economy and becoming more open also about human rights, about intellectual property, so many things in which they're lagging behind compared to other nations. No? So the opportunities for China are gigantic. It's obviously a very productive, hugely efficient country in which there's tremendous level of seriousness and commitment from the labor force, etc. But all those things cannot happen if the economy does not open. Independent institutions are not implemented, and at the same time, the challenges of intellectual property and human rights are not addressed. All those things can be addressed, but it cannot happen with all these plans that basically seem to look at the past of socialist central planning as the solution for the future. That is not going to work.
Okay, Daniel, just one final question. Do you see China's export sector picking up? And what is your advice
Yeah.
for those looking to invest in China right now?
I do see the Chinese exporting sector picking up if there is a trade deal, which is something that we need to see very, very clearly. So for those investors looking at the depressed companies that are facing all these challenges that I just mentioned, I would say maybe there is an opportunity, but you need to wait for a trade deal. You need to have a solid, clear trade deal in which China commits to opening the economy and eliminating all of these trade barriers that we have mentioned so many times, and then you may see an immediate positive reaction. But you need to see the trade deal. You cannot just wait for months on end thinking that these companies are going to solve their problems, because those are created by all these challenges that I have mentioned throughout the interview.
Well, all right, Daniel, it's always good to speak with you, and I hope you have a great weekend. Thank you so much.
Same to you. Thank you very much, Don. Always a pleasure.